Hey everyone, I'm Jeremy Szafron. This is Kitco News. Don't forget to hit that subscribe button for the latest updates. Well, inflation in the U.S. has dipped below 3% for the first time since 2021, and the Federal Reserve is expected to cut interest rates next month, with most betting on a 50 basis point reduction, according to the CME FedWatch tool. But our next guest says the story isn't that simple. Despite the dip, inflationary pressures might be stronger than they seem. The producer price index, when adjusted, actually rose by 0.3%, suggesting inflation not be as under control as the Fed had hoped. Meanwhile, spot gold just hit a brand new all-time high, breaking past that $25-32 per ounce mark. What a year it has been, even with some of this profit taking. Now, it's a crucial moment for precious metals, and with both gold and silver catching the market's attention here, silver in particular is in a unique position as Chinese demand soars and inventories remain low, signaling a potential significant move here. But are we overlooking some critical risks? And with the bond traders now pricing in higher default risks, how does this all play out with the market outlook into silver? Well, let's get into it. I'm excited to welcome back Peter Krauth. He's the editor of silverstockinvestor.com. He's also the author of this book, The Great Silver Bull. Peter, thanks again for joining us today.
Jeremy, thanks for having me. It's always a pleasure.
It's always a pleasure. And, I just was talking about your recent newsletter. You got a lot out here, and I jumped into it. There's some interesting tidbits. I mean, you mentioned that inflation is still sticky around that 3%. We know because we feel it. Do you think the Fed might be underestimating inflation? How does this impact your overall silver market outlook here?
So, yes, I mean, they obviously have lots of data, but I think that there is pressure after this much time, and they do see the unemployment levels higher and staying high. And so I think that, they're between a rock and a hard place, and they really have, I'm going to say, pretty much no point. Many have said that they should have cut earlier. They're more than likely to cut in September, and the odds are increasing that, at least according to the market in terms of probabilities, that they would cut more than 25 basis points. I'm not so sure unless something happens between now and then. But I think we can pretty much count on a 25 basis point cut. And when you think about it, inflation's still stuck around the 3%. Their target for the longest time has been 2%. I've been saying going back at least 2 years that we're going to eventually see them actually raise their target. I believe they will raise it eventually, not for a while, but to 3%. I think we'll see other central banks do the same kind of thing, and it'll just make their lives easier. And it'll be, admission that they can't fight inflation the way that they would like to, and that we're stuck with higher inflation for some time to come. So that's ideal for precious metals, because high inflation, lower rates means weaker real returns, and so real yields. And so that's a perfect environment. You're lowering the opportunity cost of owning gold and silver, and so therefore they become more attractive.
Yeah, it's been so interesting because, of course, inflation's been persistent. And as I think I mentioned to you before we came to tape here, Bloomberg had a new story out, and they're saying U.S. job growth in the year of this year towards through to March 2024 suggests a revision of 1 million jobs. So 1 million jobs completely vanishing after the revision here. We got inflation still sticky. I mean, is this the ideal situation?
It is. I really think it is. And I think that's why we, as we speak, or earlier today, we saw gold at 2,525. As you mentioned, even I think it was the spot futures price was 2,532. It has dialed back a tiny bit since then, sort of midday or so. But this is what the market is sensing. And that's why we see gold so high. It's not for nothing that Costco is now selling $200 million worth of gold and silver every month, and Walmart has joined in on the game. So Costco alone is over $2 billion a year of gold and silver. That's just tremendous. The average guy is waking up and realizing it, and flocking to the safe haven.
Yeah, we got to break into gold before. Of course, you're the silver guy, and we're going to be talking silver extensively, but you just mentioned it. I mean, gold spot hitting a new record. The chart just looks incredible, and it's a huge milestone. Do you think that this means gold still has plenty of room to run, or are we more likely to see some profit taking, maybe a pullback after this high? Where are we going from here? What's your outlook on that precious metal?
So I'm very bullish, as you can probably imagine, both gold and silver. There's no question about it. I think that we're going to end the year considerably higher than where we are now. But I do think in the very near term, especially between now and the election, and even more so between now and say maybe the end of September or so, that I think there are decent odds we're going to see some kind of a correction. I think sentiment has gotten a little bit ahead of itself, and there are two indicators that I look at. One is the bullish percent gold miners index, and that tells us the percentage of gold stocks that are trading in a bullish pattern. And the last I checked, it was right around 78. Anytime you're over 70, it's overbought. Anytime you're below 30, it's oversold. So we're right around 78. That's pretty rich. And despite that, you look at GDX, for example, you see that the gold stocks have not reached the highs they were at when gold was at a previous high. I think it was back in May or so at 2,400. If I have this right, gold stocks were actually higher then. And so they're not keeping up. I think investors in the equities are sensing that things have gotten a little bit ahead of themselves. So I'm actually near term a little more cautious.
Yeah, it's interesting. I mean, okay, we have to get into the gold miners bullish percent index in a second because we will get into this report. But, with gold breaking records here, when do we see silver catching up? I mean, silver usually follows gold, or at least traditionally, but it's been a bit behind lately. What signs are you looking for that might show silver's about to make a similar move?
So one of the other things that I look at in gold actually is the commercial exposure to futures. Our commercial hedgers, are they at a bit of an extreme, either net short or net long? And I look at the same thing in silver. Right now, both metals actually are at a strong net short position. So that means that what we consider smart money in the futures world is actually looking at both metals and finds both metals to be a little bit pricey. And so that's the second indicator that I look at. And that also suggests to me that, we need to be cautious at this point. I think that we do need to be careful. When gold settles, assuming I'm right, assuming gold goes through some kind of a smallish correction over the next few weeks or month, and once that's done and starts to head higher, I think that we will see silver really start to rocket. And to be fair, there's another thing that I look at, and that is how and when both metals perform. When you look at Fed either rate hiking and rate cutting cycles, gold tends to do well when you're at the end of the rate hiking cycle, and the Fed rate has paused. So we're now the tail end of the pause because we know that we're about to get a cut very soon. Gold actually started doing well earlier, and that's when it does really well. What we know also from history is that silver, as you mentioned, does well, but with a lag. And silver's time to take off is when the Fed is in the middle of its rate cutting cycle. So if the rate cutting cycle starts in September, it's anyone's guess how far it'll go. Maybe it's a year, maybe it's a year and a half of cutting. I would say that odds are we will really, it doesn't mean it can't move before. I think it will, but it doesn't. But I think that silver really start to catch up probably anywhere from maybe 6 to 9 months from now. You're going to see silver just leave everything behind in its dust, and it will just absolutely blast higher. And that's what we've seen. If you look at the last 3 Fed rate cutting cycles, which is, as I say, when silver takes off, it averaged over 300% return in the last 3 cycles. So it's just, like I say, anything's possible at this point, but it looks very bullish for silver.
So look to 6 months, we start seeing this data. And then, of course, there's the macro additions too. I mean, you pointed out that silver benefits from obviously high inflation, low interest rates, but it's also, we have strong demand from China here. How confident are you that this demand will hold up, especially with all the narrative, all the news we're hearing about the challenges in the economy in China? I mean, are these numbers and this demand going to continue to be there? So,
I think that the big I guess, portion of the demand from China really is when you look at solar panels. So China dominates solar panel production to the tune of 80% globally. And, there was, I was actually looking at a chart by colleague Tavi Costa of Crescat Capital. He puts out some fantastic work. So hats off to him. And he produced a chart of China silver imports, and it was the 4-month change chart. And the most recent 4-month change for Chinese silver imports set an all-time record level. So China is importing silver like crazy. I believe that is mostly dominated by its requirements to produce solar panels, because they're so they dominate that field. And so I'm sure there's some investment demand built in there as well. But really, that I don't expect really to slow down very much. A lot of this green transition is government mandated. If you think back to the global financial crisis, when stimulus started, if there was one thing that everyone could agree on, it was that infrastructure was something everyone benefited from. So to plow money into that, I think, is going to continue.
Even though silver inventories have dropped significantly since 2021, we haven't seen that big price surge. We keep teasing and wondering where it is. What do you think is causing the disconnect between supply and pricing? I mean, we've talked about this before, but unpack it for us here, Peter.
Yeah, so you're right. We have talked about that before, and I think there's still a little bit of overhang left. So to try to put it succinctly, if I look back to the sort of late winter this year, I had been asked, and I was curious myself, why was silver price looking like it was capped all the time? If, we've had these structural deficits to the tune of almost 20%. So rough numbers are there's about 1 billion ounces of supply from mining and recycling every year, and demand is now 1.2 billion ounces. So how come the silver price is not just soaring? Well, if you look at futures inventories, on the futures exchanges, if you look at ETFs, their inventories peaked right around early to mid 2021, and they've been drawn down quite consistently ever since then. So we're looking at maybe somewhere around a few billion ounces almost have come out of those different areas. These what I call secondary inventories. There was a little bit of a surge just in the past few weeks in China. That's actually come down again a little bit. So I think what has happened is these big industrial consumers have bought long contracts, futures contracts. They've bought silver ETFs, and then they've gone to the issuers and said, I want to take the physical delivery of the silver in exchange for my units. And that's how they've been able to get silver from a secondary inventory that's this above ground silver that's just sitting there without having to put pressure on new silver being mined. And as I say, we're down about 70% in these stocks. This can only go on for a little while longer. I'm going to guess 6 to 12, maybe 18 months. And in terms of tapping into and draining these inventories. And after that, I think game is over. Someone's going to ask for delivery. They're not going to get delivery unless the silver price rises significantly and helps to kind of temper, this demand a little bit and reflect, a more realistic market. So, as I say, these inventories are limited. That I believe has somewhat capped the silver price. I think we're getting close to the end of that story.
Yeah, we've been talking about that silver squeeze before. I mean, is it possible that market players are skeptical about the supply and demand imbalance because of hedging activities? I mean, what are we seeing on the other side of here?
Yeah, I mean, if you look at the hedging, honestly, I was mentioning before, you look at what the commercial traders are doing, and they're net short in silver. It's not an all-time high or anything like that, but it is a multi-quarter high in terms of silver hedging. So they do feel in the near term that the silver price is still a little bit rich, and they do think it's going to come off. But I still think that, the fact that we had that big move in late February, silver was at $22. It took a matter of a couple of months and we were at $32. That was a dramatic gain, like 45% in a matter of a couple of months. That's pretty rich. That needed to be digested. I think that's what we've seen happen over the last couple of months. And I think we're setting ourselves up for a new rally before long.
Yeah, interesting time in the world, that's for sure. Okay, you've mentioned, this chart, and we will show it on the screen, but it's the gold miners bullish percent index, and it's hanging around 80, I think 78 right now, which usually means that the market's getting a bit overheated. And again, for those that don't know, the BPI is basically a way of seeing how many gold mining stocks are in a bullish trend. When it gets above 70, it often signals that things might be due for a bit of a cool down. We talk to juniors every day. They haven't seen a lot of these precious metal prices go towards their equity price. With gold hitting new all-time highs, are we at risk of a pullback in gold and silver stocks before the next rally? Is that what we're going to see here?
Yeah, I do think so. I really do. And, some people don't want to hear this, but I'm giving my honest thoughts. I really think that there is some risk for that. I think that it's not being priced in. Sentiment itself is not great already, so that tempers it. But I still do think we've had a reasonable move since February. It has corrected somewhat. These stocks have many of them have stayed, relatively on the high-ish end. And I do think that there is some room for them to correct before they head higher. And if someone's interested in a specific name, I'm not saying that this is across the board. You have to look at each of these stocks, compare it to maybe the average for the sector. And if it hasn't had a similar move, I'm not saying that you can't or shouldn't buy into a specific name at this point. And I have actually been telling some subscribers to do that with certain names, because I feel that some of them have not moved the way the rest of the sector has already moved. So there's value. There's inherent value in some of the names. But I'm cautious, and I'm suggesting to buy in increments and do this in tranches. You don't need to be all in at once, and do it tactically. I think that it'll pay off.
So if we see a pullback, and I know we're talking more about the larger cap stocks here on the equity side with mining, but if we see this pullback, are you buying the dip? Are you buying the haircut? I mean, tell me who you're looking at.
So yeah, I'd be buying the dip. I think that especially when you look at the larger caps, they are probably going to see more of a dip. That would make sense to me. And if we're talking about, in the silver space, some of the larger producers, I think that you're likely going to see better prices to buy names like Wheaton, Pan American, First Majestic, Endeavor, Hecla, MAG. And even, names like Aya. All of these have really performed relatively well since we've had this run up since February. Some more, some less. But I think that these are really great go-to names, and they would make a lot of sense to add to when the dip comes.
Yeah, interesting. I should call up Keith Neurmeyer with First Majestic and get him back on here, especially because they have their own mint. Okay, back to silver, testing resistance around $29, 30 being a critical level here. We keep seeing it being pushed down, but what technical signals are you watching for to confirm a breakout? I mean, how confident are you in silver staying above 30, Peter?
Yeah, so I mean, if you look at silver, really silver would need to get to 30 and stay there for a couple of days. Right now, it's actually close to its 50-day moving average. I get the sense that that's going to end up being a little bit of overhead resistance, and that it could come back down, test the 200-day, which is closer to about to 26.50, 27. And where it bottomed just a week or so ago was 27, honestly, and it actually bottomed right near that level early May. I think we could actually see one more test of that level before we get the final breakout and see it push nicely above 30. And of course, the earlier high this year was 32. That's going to be indicative of that's going to be the most clear sign, I think, of a new rally, when silver can break 32 and hold it and head higher from there. Then I think at that point, the next targets will be pretty clearly something like 35 and then 40. And it won't be all-time new territory, but it will get very exciting. And I absolutely believe that the equities will follow very, very dramatically.
Yeah, certainly a lot of people hoping for that. Your recent analysis mentioned rising default risks in the bond market, credit default swaps hitting a 6-month high. How do you see this affecting silver?
Yeah, I mean, precious metals are a safe haven. So naturally, there's no question, gold is the first one, king of safe havens, and certainly king of precious metals. But when you see gold run and we're at 2,500, it starts to get kind of rich for a lot of investors. Let's call it eventually 3,000. That's going to be really, really rich when you get to these nice big round numbers. And I think you're going to see people looking at that and saying, I need to get myself some gold, but how much, what am I getting for $3,000? I'm getting an ounce. What can I get? What else can I get? And even if silver's at $35 or $40 at that point, you're getting a lot more silver for your money, weight wise and so on. I think that that'll make it the natural alternative, and that's why you see it lag, but then catch up. And then when it catches up, it does so in a dramatic way, and it tends to surpass. So I think that that's something to consider.
So interesting. I mean, last time we had you on, we were talking a little bit about how that trend has changed. It's a lot more expensive to go and buy some gold than it is to silver. And we're seeing some of these countries like India that are really gravitating towards that silver market, China too. It'll be interesting to see how that plays out. But with all these rising risk, defaults of risk, we talk about the debt crisis that the U.S. is, dealing with. It doesn't sound like a lot of people in politics even bringing up debt in that country. But is there a chance that the broader financial instability could lead to some more liquidity issues, leading to a sell-off of these safe haven assets like gold and silver?
That has happened. The best analog we have is the Great Financial Crisis. And I was looking at this just earlier today. If you look at what happened to both gold and silver when the crisis hit, this would have been, I believe it was right around September or October of '08. Both metals sold off pretty dramatically, and that was temporary. And that tends to happen because investors will get margin calls and they need to sell what they can. And often, those metals have been amongst the things they have that have held up the best, and they're certainly liquid. So they will sell them off, raise cash, meet their margin calls, and then the smart money it will move in. The strong hands will move in and start to quickly actually buy those metals at these new lows because of the forced selling, and quickly push it back up. We've seen that pattern happen over and over. I wouldn't expect it to be any different. So when the next crisis hits, if someone feels that they should have more precious metals, gold or silver, watch for that kind of a dip. It's more than likely to happen, and be ready to step in and take advantage of it, because it will reverse much higher very, very quickly. And, you will not have a lot of time to act, but if you're paying attention, you can take advantage. I did that actually I remember that being very clearly in October of 2008. And I think gold was somewhere around the $700 range. Forget, prior to that, it would have been probably around $800-900. It dipped very quickly. And I thought, I could be wrong. It could go a little bit lower. I felt my downside was very limited, and I took advantage of it.
Yeah, of course. I mean, the markets are cyclical, as we know. We also know that people love to hate silver. I mean, that's a lot of the reason why investors gravitate towards it. They like that this asset is hated because people don't really understand the fundamentals. You've been doing this a long time, Peter. Before I let you go, give me some advice here. What do you tell what do you tell investors that are long silver? They're angry about it. Like, when is this going to go up? What's your thoughts here? What's your final thoughts?
Well, I mean, look, they know as well as you and I do that it does its own thing. It revolves in its own orbit. Silver, to some extent, of course, is affected by gold. But, if you just feel that you don't have the patience for it, then it's not a market for you, perhaps. But history has proven that it does well. It outperforms gold in bull markets. It lags it, but it outperforms sort of later in the bull. So, if you have the patience for it, your patience will be rewarded. It absolutely does it each and every time. But, you have to also make sure that you're not necessarily overexposed either. If you're not comfortable, if you feel that you're not in a comfortable position, you feel that you have too much of it, sell down to your comfort level, but make sure to have some physical. And then, to the extent that you're comfortable with the equities, spread it across the different risk spectrum, everything from the ETFs and the large royalty companies through the large producers and all the way down to the developers and the juniors. But there's room for all of those in a silver portfolio to different extents. Everyone has to know their own, their own comfort level, their own risk profile. And they may want some, not others. They may want more of some than others. And just be clear that you're going to have to, arm yourself with patience. Silver's gift is its volatility. You have to be able and willing to take advantage of it.
Yeah. Well, the future looks bright. I'm going to hold you to that 6-month period. I want to see where this goes. And of course, we haven't even gotten to the Fed and Jackson Hole, but of course, Kitco News will have coverage of that all week long. Peter Krauth, the editor of silverstockinvestor.com, which is great, Peter. I really appreciate those research reports. And of course, the author of this book, The Great Silver Bull, unpacking it all for us today. Thanks for your time, my friend.
Pleasure as always. Thank you, Jeremy.
Appreciate it. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for tuning in. Got lots of great content coming up, so hit that notification button, and we'll see you next time.